Alright, so I recently had a conversation with Ken. Most of you know him by the name Chicken Genius Singapore. We talked about why he's been bearish. If you follow him on Twitter, you've probably seen his tweet for a while. Some of those tweets will pop up on the screen right now. He's been bearish on the economy, on the way the Fed will handle things. Obviously, we had this conversation a bit before the Fed decided to increase interest rates by 75 basis points. Now, to be honest, me personally, I think it's a good move. It's not high enough to destroy the economy because, as you will see actually in this video, I'm going to show you lots of graphs. The economy is doing much better than what you would think if you read all the headlines. Now, granted, prices are going through the roof. And again, if you look at the 8.6% inflation thing, it's not really telling you the real story, right? Because oil prices, energy is what basically drives this whole thing. That's up triple digits year over year. Airline fares are actually up 38%. So you see where I'm going with this. We're going to have lots of graphs in this video. But again, going back to my conversation with Ken, talking about his bearish points, which are extremely valid. Some of you that might ask, does he still hold Tesla? Does he still believe in Tesla? Yes and yes. But as I will tell you right now, you can obviously implement a tactic that is pretty usual, let's say. Be long and be short at the same time. That way you're protected from both sides. Now, I'm a bit more bullish than him, but in this case, both of us can be right and both of us can be wrong. Now, before I show you all the graphs and we talk a bit more about our conversation, I want to ask you a question. When you hear the word recession, what's the first thing that pops up in your head? You have that word, you have that explanation, write it down in the comments below. That way we're all sure we're talking about the same thing and maybe share our sentiment. I will answer that question at the end of this video. So obviously we've all seen the numbers, the CPI numbers, right? It's still extremely high. Some probably thought after the numbers we saw in April that we might have peaked and it will be going down, but that was not the case. But if you look at the core CPI year over year, it's still up, but it's down from the last time they reported already twice. So that's a good thing. But then again, core CPI is excluding food and energy, which is basically the things that we need daily. But we're going to touch on that in just a bit. Now, the core PPI, the same thing, it has been decreasing a little bit as well. And you might remember if you've been looking for a car, well, last year was completely nuts, but right now actually auto sales are down year over year. So you can already see that in some parts of the economy, let's say, some things are improving. Now, during my conversation with Ken, he actually showed me this graph right here, the 4 quadrants framework. Now, I'm going to ask you again a question. Where do you think we are right now? Inflationary bust, inflationary boom, disinflationary bust, or disinflationary boom? Let me know down in the comments below. I will tell you our conclusion in 3, 2, 1. Top left corner, inflationary bust, buy cash is the safest currency, sell financial assets. Now, I do want to mention one thing here, and this is where I and him disagree. And that's the fact that I have no issues dollar cost averaging even in this environment. If you're investing for the long run, if you look at, let's say, if you look at the graph from 20 years ago, right? The graph looks like this, goes on the way up. But if you zoom in and you remember what happened in the last 20 years, right? 9/11, 08, China trade wars, new presidents, COVID, you name it. It wasn't really smooth sailing. But if you zoom out, you would say, must have been an incredible 20 years. And yes, if you invest for a long, long time, it has been actually an incredible 20 years. So the same thing I will say here. Yes, in the short term, we might suffer, and we will probably suffer. We have been suffering for a year and a half now, if you look at growth stocks. But if you're not willing to dollar cost average when things are down 50, 60, 70, 80%, when will you want to dollar cost average? I understand we're now in a very, very difficult situation economically wise, but if you're not willing to do it now, when will you be willing to do it? When we're at all-time highs? It doesn't really make sense, right? Now, going back to a point where both of us agree, and the big issue here is not rising interest rates, it's still rising fuel prices, fuel and energy prices. Because food, we're going to talk about that in a bit, food will be dealt with normally. We're going to talk about inventories, but energy prices is an issue. How do you tackle that right now? Now, there is one solution, and that's one thing that happened 2 years ago. Remember when those prices were negative? Well, that's because work from home happened. Everybody was locked up. They closed the economy. Now, closing the economy is never a good idea and should have never been done. But since we closed the economy and people started working from home, obviously demand for fuel went down significantly while the inventory was still there. Supply increases. It takes a while for that to take effect. Now, what can we do here? And it is a real solution. People will continue to work from home, or people that return to the office might suddenly say to their employer, look, gas prices are through the roof. Either you pay for the gas, or I'm just going to stay home and work from there, which is a logical and maybe a normal and a good solution right now. And that might maybe, let's say, curb the demand for fuel. Again, this is just one of the solutions. I don't think that will happen. Maybe for some individuals, yes or no, but it is a real solution. Otherwise, I don't really see one. Interest rates going up is not going to solve this. And now as for food, as for retail. So we had obviously the news that retail sales posted unexpected 0.3% decline in May as inflation hammers consumers. Now, while that might be correct, you will also have to look at this. On a yearly basis, sales were up 8.1% as spending combined with higher prices has put a floor under the numbers. Consumers have been resilient through the inflation wave, using savings to compensate for the higher costs. And in my opinion, things might improve from here. If we look at inventory, look at this graph right here. So the blue line is US business inventories pre-pandemic. The gray line is post-pandemic. We are seeing an increase already. We've seen that with Walmart. We've seen that with Target. They've been announcing that they're going to take a hit in the next quarter. So profit might come down. But to be honest, who cares right now if profit might come down for those big companies? It's actually a good thing for us, the customers, which means high inventory. They might reduce prices to get rid of that high inventory. Now, some of you might think I'm a bit too bullish, but again, in my conversation with Ken, I was bearish and bullish at the same time. I see things from a short and long-term perspective. For my holdings, it's always long-term. For my next coming moves and obviously their day-to-day lives, it's bearish since we can all agree that things are getting more and more expensive. And from an economical standpoint, you can see in this graph right now that we might already see, things move in the right and maybe even in the wrong direction. So this comes from the Atlanta Fed GDP now. It expects actually GDP growth of 0% for Q2. So if, again, we get the energy prices and the food prices under control, because those are the two most important ones, the Fed might not need to raise interest rate as high as people were expecting. Now, it might be wishful thinking, but these are just my thoughts that I shared with Ken during this situation. Obviously, looking at his tweets and remembering what he told me in our conversation, he's a bit more bearish on things, but I guess we'll see what happens. Now, I'm filming this after Jerome Powell spoke, and to be honest, I think he spoke in the right tone. I think he wanted to project that, they know what they're doing, and if things change, they will change accordingly as well. Now, from what we heard, he thinks, they believe that inflation might have peaked already. But again, energy is something that the Fed does not control. The government and, multiple governments control that. So it remains to be seen. But I'm going to show you a couple of more numbers to see why I'm a bit more bullish. So we have here the ISM Manufacturing Index. It's also known as the Purchasing Managers Index, PMI. It's basically a monthly indicator of US economic activity based on a survey of purchasing managers at more than 300 manufacturing firms. It is considered to be a key indicator of the state of the US economy. So looking at the numbers, right, the ISM Manufacturing PMI for the United States unexpectedly rose to 56.1 in May of 2022 from 55.4 in April and beating market forecast of 54.5. Now, faster increases were seen for new orders, 55.1 versus 53.5, production 54.2 versus 53.6, and inventory 55.9 versus 51.6. Also, price pressures eased for a second month, 82.2 versus 84.6, while employment contracted 49.6 versus 50.9. Although companies improved their progress on addressing moderate-term labor shortages at all tiers of the supply chain. Now, meanwhile, business sentiment remains strongly optimistic regarding demand, but supply chain and pricing issues remain the biggest concern. I hope you understand why I'm a bit more bullish, but I completely understand every bear point out there. If you look at the history will tell us we're not in a good situation right now. What we don't want to go into is a very, very harsh recession. So now I'm going to answer the question. When I say recession, what do you think I mean, or what's the first thing you think of? I'm sure most people think of the word recession, they directly correlate it to negative, nothing grows, everything goes down. But no, recession just means a slowing down. High inflation, more unemployment, higher prices. Then stagflation happens as well. Stagflation is actually much worse. But in a recession, not everything goes down, right? People are still living their lives. People are still going to work. Companies are still generating money. People still need to buy food. Yes, in this case, people will need to buy energy, fuel that is extremely high. But again, that's why I believe that if we tackle that issue, high energy prices, a lot of good things will follow after that. Because there is really no reason why we should keep on hiking interest rates by 75 basis points or even more. That would just destroy the economy that is, in my opinion, in a much better place than what most headlines might make it seem. If you keep on hiking those interest rates, which right now, fine, 75 basis points is okay, the next one might also be 75 basis points, you'll still be on the low end. Now on the screen, it will pop up the forecast from the FOMC. Again, you can see that they already plan on reducing it. Now to conclude, you can be long and you can be short at the same time, just as you can be bullish and bearish at the same time. How? Short and long-term view. Short term, yes, the situation right now is bad. As long as there is a war in Ukraine, things will continue to be bad. Hopefully that gets resolved pretty soon. Second half of the year, remember, second half of the year-over-year comparisons will be much easier for companies that are reporting. Now, again, you will have pressure on earnings as well. So even though those year-over-year comparison might be easier, the earnings might get hit. So what you would have expected it to be a year-over-year comparison that is much better than expected might be maybe a bit less good, let's say. So overall, those are my thoughts. These are basically the main points we talked about in our conversation, besides some private stuff that will remain private. You will hear him on Tom Nash's channel pretty soon. That was announced on Twitter as well. They're probably going to talk about the whole situation and Tesla, maybe even Palantir. Again, he still holds Tesla. You can play it both long and short at the same time. Obviously, he's been missed on YouTube, but at least he's living his life at his fullest. So all I can say is do what is best for you. Be sure to have some cash, if not a lot of cash on hand to live, to enjoy life, and then eventually to start investing again if you feel more comfortably later on. So that will be it for this video. If you enjoyed, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next video. Bye bye.